Talking about ADX. Now, ADX is a very simple indicator. ADX is usually combined with other indicators or within other indicators. But ADX is the average directional index, and it helps you interpret the strength of the trend of the current market. So ADX is part of the overall directional movement system that was developed by J. Wells Wider, but can be successfully used on its own to signal trend changes and to indicate whether a stock or an asset is trending or ranging. Now, the ADX indicator is a popular trend indicator, and it provides information about momentum and trend strength. And if you understand or believe the old adage, the trend is your friend, and that's very true. You should always be trading with the trend. But that old adage continues on farther. The trend is your friend until it isn't. So understanding when the trend is in trouble will help you also know when to be exiting the market. So as you probably know, the ADX indicator comes with 3 lines: the general ADX line and 2 DI lines or DMI lines, and that makes up the directional movement. But we're going to only be looking at the ADX line, because the ADX line by itself tells you about the strength of the trend. So real fast, let me just pop up a live chart so you can understand what I'm explaining to you. Okay, this is a live chart of the Euro US dollar. It's not because I'm endorsing a trade for the Euro US dollar. This is my standard teaching chart. I always teach from the Euro US dollar 30-minute chart. Okay. Now, I've gone up here to my indicators, and I've selected average directional index, and it's dropped the average directional index on my charts. This is the red line. It doesn't matter what color line it is. You just use the settings, and you can select the length of the ADX or the smoothing, the range, and you can set this off. We want a blue, we could have blue. Let's use purple. I'm in a purple mood today. Okay. So now we have purple, but this is the ADX line. So ADX, even though it is primarily used with the DMI, it is a freestanding indicator. And the ADX moves within a range, and it tells you the strength of that trend and the direction of that trend. So you can see it almost mirrors price. Now, when you combine that with the DMI, which is part of Wells Wider's directional movement system, you can do more to interpret markets. So right now, I'm going to turn on the ADX line. I said the ADX line below is the red line going through the DMI lines. But to me, that's all confusing mess. I much prefer looking at simple things. So this is the ADX on our charts. The standard is a 14-day or 14-period look-back period and a 14-period smoothing period. So let's go back to my PowerPoint here. Okay. So essentially, the ADX line measures the trend strength, and a rising ADX means that the trend is gaining strength, because this is what we need to know. Okay. I explain this as the markets, to me, are random. They're made up of millions and millions of human beings making trades all around the globe for their own reasons, whatever they're doing. And they're completely random. Most of the time, the markets trade in mess. price might be moving up, but it's hard to even actually see. It's just if you look at the numbers are higher, but it's a unqualified random mess. But there are certain times that the markets organize themselves and become non-random. And when the markets become non-random is usually when they are trending. Now, if you think of, say, a locomotive, when that train starts taking off and gathering steam in those, like in the old movies, you hear chug, 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 chug. Well, once it's gathered that steam, okay, it's just like a trend. That trend is slowly gathering strength. As that trend gathers strength, it becomes almost impossible, just like a locomotive, to stop it on a dime. And during that movement period, that the markets start exhibiting non-random behavior. And when we have this non-random behavior, we can start making sense out of what's happening, because it takes a lot of energy to start a trend. It takes a lot of buyers at that point to start a trend. And the buyers are pushing price up. So again, you can imagine like a little hamster in his cage. When I was a kid, everybody had hamsters. And that hamster would get on his little wheel, and he would start, those little legs moving around that wheel would start moving and moving and moving. And before you know it, that wheel was moving so fast, you were amazed how fast that hamster could go. And he could go for a very long time. But the fact is, when he finally got thirsty, he couldn't just stop the wheel. The wheel had to lose momentum. Now, granted, anytime the markets could gap down and stop dead flat, but that's very rare. And you also don't want to be in the market. You don't want to be the guy predicting the trend, and you don't want to be the guy at the end of the trend. You don't want to be greedy. You want to take it when that locomotive has moved from that chug, 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 the steam's shooting out and the guy's ringing the bell, the whistle, and that locomotive is chugging along, because no matter how hard that guy steps on those brakes, he can't stop on a dime. Now, if you put it really hard because there was a woman sitting on the tracks, he could, but that locomotive would probably fall off the tracks. But you want to be able to take and see that momentum and get into markets once that momentum is qualified. And the minute that momentum starts to wane, exit the markets and take your happy profit and go away. Just same as in reverse if we're going in a downtrend as opposed to an uptrend. And the ADX indicator helps us see this very easily. So essentially, the ADX line measures trend strength, and a rising ADX means that the trend is gaining strength. A falling ADX shows the trend that is losing momentum or reversing, and a flat ADX shows a sideways range. So in other words, as we see that ADX moving up, it's not just telling us that we're moving into an uptrend. It's telling us that we are gathering momentum. We're gaining that momentum, and this is where you want to be entering the market. As that momentum starts gaining and climbing, you want to be in the markets. Okay, the momentum wavered here for a second and then continued up here, but then started to decline. Price hasn't really declined yet, but the momentum has now exited the markets, and you want to be out. You don't want to be the guy who's trading here. You don't need to be the guy who's making profit here. You need to be the guy who made his profit here. I was happily sitting on the sidelines, having lunch with his friends, having a cocktail, not caring. Because that's where you get your high probability trading in. So let me get my marker off here. Finally, we must talk about the threshold level of the ADX. So as you can see, and I'm going to show you a screenshot in a second, we plotted the vertical line at the ADX window at 20. Here, or we can go back to my Euro US dollar chart. See the numbers over here to the right? So what we've said to ourselves is 20 is the point where the market is telling you it has no momentum. We see it rising, and it can rise here, or we see it falling below 20 here. So we could say that the 20 is our threshold. Our 20 is our number that we want to watch. Ooh. So the 20 level acts as a tiebreaker. If the ADX is below the 20 level, prices in a range or in a very weak trend, and only when ADX breaks above 20 level, it signals a strong trend that is likely to continue. So in the screenshot, we mark this first time that the ADX breaks above the 20 level. And then when the ADX broke back below the 20 level and signaled that price had lost momentum. So we see this in the black line here. The green and the red line are the DMI lines when it's combined with the directional movements. Like I said, I don't use the DMI lines. I use only the ADX. So the second part of the ADX indicator are the DI lines, which are usually color coded, the green and the red in our example. The DI lines provide directional information, and they also measure trend strength. Now, it's important to understand how those green and red DI graphs are calculated, but don't worry, we'll keep it simple. The only thing you should remember is that the DI lines compare the absolute candle highs and absolute candle lows. So what it's looking at is the highest price and the lowest price. So the ADX line is looking at the average of the price moving and gaining the momentum. The directional movements are measuring the highs and the lows. So the green DI line rises, means that the high and the low are higher than on the previous candle. When the red DI line rises, means that the high and the low are lower than the previous candle. For an inside bar, the DI is 0 because both the high and the low fall into the previous candle's body. So what you're analyzing when you have an inside bar means you have a significant high here and a significant low here, and the next bar or the next candle was within that other bar. So therefore, your DI line was inside, your high was inside, your low was inside, so you would have a 0 value. So we set the DI setting period at 1, which means that the indicator just compares the two most recent candles. This is a good way to understand the DI calculations quickly. Now keep in mind the DI just looks at the absolute high and the absolute low, not the candle body. It doesn't care about the open and the close. So if we were to just say and take those numbers and measurements and put them on a bar chart on our charts, you would see it very easily. Okay. This is simply telling us the movement, giving us a reflection of the high and the low for that period. Because the high and the low are much more important than the open and the close. Because the open and the close just are numbers based on a specific period. You know, the close as at 11:59:59 exactly. It was whatever the number it was. But the high was the number it reached during that 1 hour period, or the low was the period it reached. So it said when the DI lines cross each other, they give a signal. When the green line crosses the red line, it means that the highs and lows of the previous candles are moving higher, which confirms an uptrend. If you were to use that simple calculation and combine it with this simple upward movement of the ADX line, it tells you that that movement is starting to gather momentum. You now have a significant piece of information. So the uptrending, okay. So in the next shot, the next screenshot I have for you, here, let's go look. We can see here what's happening with the candles. Granted, we have green candles because the open is higher than the low, and the open is higher than the close is higher than the open. But if we look at the highs and the lows, which is the significant part, the highs and the lows are higher from each line. Then we had the crossover here. And then we also had at the same time our ADX line moving above 20 and starting to gather momentum. So that's telling us we have a nice little price run here. It's telling us when we should actually enter the markets to take the advantage of the trade. The minute the ADX line starts to show any loss of momentum, we want to be out of that market. So this would have given us that waiver right here. We would have gotten out. Yes, we wouldn't have gotten to here, but we also wouldn't have gotten to here. But this is where we want to just take. We made our money. Anywhere we've gotten in here, we got to here. We made substantial profit. Why do we need to stay in longer? So combining the the entirety of Wells' directional movement theory tells us that we have higher highs, higher lows, as well as a gathering of momentum. So now let's connect the dots and look at the two markets and explore how the ADX indicator can help you make sense of these charts. So over here we have an example. It's an old chart of the Australian New Zealand dollar. There were 5 ADX signals and we marked each one. See the little arrows and the lines? Well, that's where our ADX line either peaked or started to fall. We also have the crossovers of the DM lines. Now, if we waited for this peak, this is where, if we were in the markets already here, this is where we should have been exiting them. Here we have not much of sideways mess. Now here we start to see a decline in momentum, a crossover, which is giving us a sell. Again, we see the gathering of the momentum above the 20, the crossover, and it's giving us a buy scenario. We also, now we have at this point, the loss of momentum, and we would have been out of the markets. So in other words, a relatively early long entry into the decent rally, once the ADX hooked and turned down, we would have entered the market and we would have reversed when we got the hook as the next exit signal. That hook is that ease. You don't want to wait till it's falling. You want the minute that momentum starts to wane. So as you can see, the ADX indicator, just like any other indicator, does not provide 100% accurate signals. But a trader who can find ways how to maximize the opportunity while managing the failed signals can probably make good use of the ADX indicator. Remember, the trend is your friend. You don't train, nobody in their right minds ever would make a trade blindly based on an indicator. Because remember, indicators only indicate. The only thing that tells you what the market is doing is price. And when you can't understand exactly what price is saying to you, you use indicators to confirm. So indicators are your confirmation, or they're your signal to look at something, but they're never your signal to make a trade. When we talk about a buy or a sell signal, it's what's hitting you on the back of the head and saying, dummy, look at this here. That's what it's saying to you. Okay. And then when it's giving you the sell signal or get out of the market, it's hitting you on the back of the head and saying, look, there's a problem here. Figure out what to do. Okay. So keep that in mind at all times. So let's recap what we talked about the ADX. The ADX indicator has 3 graphs. The ADX line and then can be combined with the 2 DI lines. The ADX indicator is a trend and momentum indicator. The ADX line measures trend, but it does not provide any information about direction. And this is what you don't want to mix up. Just because the ADX is moving upward, it would be moving upward even if there was a downtrend, because it's only moving upward, telling you the momentum of the movement. So when the ADX line crosses above the 20, it signals whichever trend, an uptrend or downtrend, is gathering the strength. And the two DI lines analyze bullish and bearish candles. The DI lines compare the absolute high and the low of the candle. When the DI lines cross, it gives you a signal. When the green DI line is above the red one, it signals that the market is trending higher, and just the opposite when the markets are trending lower. So what you're getting is simple pieces of information telling you, first it's telling you there's an opportunity, then it's telling you that opportunity might be over. You still have to make the rest. So think of it as alerts. And again, think of it as just a pound on the back of your head. It's something to just saying, here, look, figure it out. So that's all tonight, folks. It's a simple little indicator. And as I said earlier, I can only give you the basics. I can give you some general understanding. I can give you some things to think about. I can give you some hints. The rest of it requires you using this indicator, not to make trading decisions. Just put it on the bottom of your charts and look at it now and then whenever you're doing your other strategies until you're comfortable with it and you've interpreted and you have it. It's like reading your palm. When you're ready to read your palm and you're comfortable with it, add it into your trading system. But don't blindly follow it. Don't just jump in there and say, Barry gave us a class tonight. I could start using this tomorrow and I'm going to make my trades based on this. No. Get to know it, get to understand it, and get involved with it. So thank you very much. And as I said earlier, a copy of this class the recording will be available using the same link you used to come to this live class tonight. So thank you very much. Have a great trading day. And if you do have any questions, go to the Alvexa website, click on the chat button and type it in, and somebody will be glad to answer you. Send them an email, whatever you want. Alvexa is always there to answer your questions. Good night now.